In this video, we're going to take a look at a fake out from the New Zealand dollar last week that could send the market lower this week. Okay, so looking at the New Zealand dollar versus the US dollar on the 3-day time frame, and the only reason I'm using this time frame is to fit this trend line on the chart, which goes back to late 2021. So you can see that we've got all these highs throughout 2022 as well off of this level, and last week was a fake out above this. So this is the 3-day time frame, and it doesn't look like much of a fake out here. But if we move into the daily time frame, you can see how exaggerated this move was from the NZD. So this is our trend line right here off of those highs. So we've got these highs back here. We've got this one. And then you can see where the market did break out from this. It even closed above that 638 level that I've mentioned to members over the past few weeks. So we got the close just above, the close right back below. This was a mini fake out here. And then this was a much larger fake out of that trend line. So typically when you get a move like this from a market where you get a fake out to one side of a level, especially one that goes back a couple of years, you do get a move in the opposite direction, an extended move in the opposite direction. So for the NZD, that would equal a move down here toward this lower trend line, which the market still has some room to run here. You can see where so far the bounce recently did not test this level down here, and it's also coming up to retest this resistance area right around 62.40. So this lower level right here, if we zoom out, you can see where this trend line extends off of those lows from 2022. So we've got the lows back here, we've got this swing low and also this one. And so this is also a very prominent level, not quite as significant as this one up here where we got the fake out from the NZD, but it is still a very prominent level that could serve as a magnet later this week. Now do keep in mind that we have FOMC on Wednesday, and that is going to introduce a lot of volatility for the US dollar. Now, let's take it one step further and look at the hourly time frame. But first, if you guys are enjoying this content, be sure to smash that like button and also subscribe to the channel and click that bell icon for notifications. So looking at the hourly, this is our trend line up here. And you'll notice that the market did not respect it on the hourly, which makes sense because it does go back to 2021. So a lot of times when you get a level that significant, you're going to have to look at the higher time frames in order to see the market respect it. Now, with that said, we still know that this area up here, okay, this trend line here, and also this area around 62.40, this is going to be the key resistance for the New Zealand dollar as we head into Wednesday's FOMC. Now, looking at the hourly, what we can see is that the market has been moving within a descending channel. All right, so we've got the market moving off of this high right now. Okay, so you can see where this high was tested just here recently over the last couple of hours. All right, so if we move in, you can see that we've got this high up here. Okay, so remember this up here was the fake out that we just looked at. And we've got this swing high, we've got this one here, and also these two lows. So with the market coming off of resistance, we could see a little bit higher from the New Zealand dollar, potentially back here toward this horizontal right around 62.40, and maybe even this trend line where we got that fake out. Because remember, we do have FOMC coming up. So expect volatility for a pair like NZDUSD. With that said, though, the market is coming off of resistance right now. So really what we can say about this, okay, just kind of summarizing here a little bit, we have this area right up here between this channel resistance right around 62.20, 62.25, and also 62.40. So this is going to be our resistance, and support for this market is going to come in down here at the bottom of the short-term channel, and also that trend line, so right around 6,100. All right, so this is going to be our support over the next few days going into FOMC. And again, we do have resistance right up here. So these are areas for the market. Don't look at this as a specific price here at this level or a specific price up here. This is a resistance area for the New Zealand dollar, and this is a support area for the NZD. And by the way, guys, I talk about my trading group a lot, but if you are interested in joining, here's what you need to do. So what you need to do is look below this video here on YouTube in the description and click on that link for Blueberry Markets. Or if you're on the website, scroll down from this video and you'll see the link right there. Head over here to this page and fill out this application. Okay, now once you fill out this application, you are going to have a choice from either a 20% deposit bonus or your first trade free, meaning that if your first trade is a loss, they will refund you up to $300. Okay, so it's literally a risk-free trade, or you can get that 20% deposit bonus. So once you sign up over here, you're going to deposit $500 or more and then message me on the website. I'll give you lifetime access to our trading group where I provide daily videos, exclusive setups, and also my trades in real time. So I'm going to show you my trades that I'm taking on the Euro USD, Bitcoin, etc. So once again, see the link in the description here on YouTube, or if you're on the website, scroll down from this video and you'll see the link to Blueberry Markets right there. Okay, so with that said, not financial advice, just my opinion, but I do favor looking for shorts up here in this area for a target down there around 61 going into FOMC. Just keep in mind though that unless the market moves significantly away from your entry, you're going to have to manage your position very carefully because of FOMC tomorrow. This is not a case where you want to enter just before FOMC because of the volatility that we're likely to get. So this is a case where if you had managed to get in up here somewhere, right, and then the market moves down here before FOMC, let's say it's trading down here in this area, then you could move your stop down, maybe to break even, take half profit, do whatever to reduce your risk here before that volatility. But this is not something where you want to enter the market just before tomorrow's events. All right, so once again, just my opinion, never financial advice, but really for the New Zealand dollar, given the fact that we did see this very significant fake out materialize last week, and also the market moving in this short-term downtrend and hitting that resistance area, I do like the idea of looking for shorts up here for that move down here toward 6,100 as we enter FOMC and also later this week. Now, the invalidation for this, would materialize on a close, not just above this horizontal at 62.40, but we would have to see the New Zealand dollar reclaim this trend line up here. Okay, so it would have to close back above 62.40 and then also that trend line where we got the fake out, right? Because as long as the market is below this, I favor shorting the market toward this area down here, because again, this up here was a fake out, and a lot of times you do get an extended move in the opposite direction following a fake out of this significance. All right, so that's it for today's video. I hope it helped. If it did, be sure to smash the like button and also subscribe to the channel and click that bell icon. And don't forget to sign up to Blueberry Markets, where you can get your first trade free or a 20% deposit bonus. See the link in the description here on YouTube, or if you're on the website, scroll down from the video and you'll see the link to Blueberry Markets right there. Trade well this week, and I will talk to you again tomorrow.